Breaking news that could shake global markets. President Donald Trump has declared a new, sweeping 100% tariff on Chinese imports starting next month. This bold move is in direct response to what Trump describes as China's aggressive export control measures, escalating the ongoing trade tensions between the world's two largest economies. In a recent social media announcement, Trump revealed that these tariffs will come into effect on November 1st, 2025. He criticized China's actions as extraordinarily aggressive, pointing to a recent hostile letter from Beijing to the world. The letter reportedly outlines plans for imposing extensive export controls on almost every product China manufactures, even those not traditionally produced by them. Trump called these actions unprecedented and a moral disgrace, highlighting the severity of the situation. Currently, U.S. tariffs on Chinese goods stand at 30%, a significant reduction from a peak of 145% earlier this year. The new 100% tariffs will be added on top of these existing rates, intensifying the financial impact on imports from China. Beyond tariffs, Trump also announced that the U.S. will enforce stricter export controls on critical software, further tightening U.S. trade restrictions with China. This announcement triggered immediate market reactions. The Dow Jones Industrial Average plummeted by 385 points, about 0.8%, while the S&P 500 and the Nasdaq experienced steeper declines of 1.25% and 1.75%, respectively. The market sell-off reflects investor concerns about worsening trade relations and their potential impact on the global economy. Trump's declaration comes just a day after China introduced new limits on rare earth minerals, essential components in manufacturing semiconductors used in various technologies, from artificial intelligence systems to household appliances. These minerals represent a critical leverage point in the high-tech supply chain. In a press briefing from the Oval Office, Trump described China's recent actions as shocking and unpredictable, emphasizing that the U.S. did not initiate these hostilities. He said, "This is not something I instigated. It was a reaction to China's moods, which were aimed not just at the U.S., but at the entire world." While the situation appears tense, Trump left the door open for future developments by stating, "We'll see what happens." Previously, Trump underscored his frustration with China's global trade strategy, asserting on social media that China should not be allowed to hold the world captive, implying Beijing's trade policies have been strategically restrictive for some time. In retaliation, Trump threatened a massive increase in tariffs, fully acknowledging this action could be potentially painful for various stakeholders, including American consumers and businesses reliant on Chinese imports. Adding to the diplomatic uncertainty, Trump hinted at the possible cancellation of a scheduled meeting with Chinese President Xi Jinping at the upcoming Asia-Pacific Economic Cooperation (APEC) summit in South Korea. He stated, "This was a real surprise, not just to me, but to all free world leaders. I was supposed to meet President Xi in 2 weeks, but now it seems pointless." However, in a subsequent statement, Trump clarified that while he intends to attend the summit, the meeting with Xi might not take place. Again, he left the outcome uncertain with a simple, "We'll see what happens." This announcement unfolds as the current U.S. China trade truce, which temporarily eased tensions, is nearing expiration in less than a month, setting the stage for what may be a pivotal moment in international trade relations. But here's where it gets controversial. Is imposing a 100% tariff really the most effective way to respond to China's export controls, or could it backfire, harming global supply chains and consumers worldwide? What do you think? Are these tough measures necessary to protect U.S. interests, or is there a better way to handle this escalating conflict? Share your thoughts below.